Hope you kind of got the first system, 20 Akasha Bhumi. Now let's jump on to the second system, second trend following system. And the second trend following system is called as double horse. That's the name what we have given. The second system which we will learn is called as double horse. Now what is this double horse? Let's jump directly into this. So again, similar to all the systems. So what are the ingredients? Here the ingredients are technical chart, candlesticks, 13 period simple moving average, 34 period simple moving average. So here we are using two separate and different simple moving average, 13 and 34. Those are the ingredients. With respect to time frame, daily time frame, we will use daily time frame. Now let us kind of go and arrange that in our trading system. Yep. So here is the normal technical chart. So now from this normal technical chart, let us kind of, so we have the candlesticks. So let that remain that way. We need two ingredients, separate ingredients. So one is we need 13 moving average. So I've kept 13. I'll keep the thickness slightly high. And let's say, let me put that to say red color so that it's easier. And then I need one more, which is 34. And so I'm going to leave it at maybe green, and I'll say okay, apply. Okay, so now beautiful. This is the setup, very simple. So you have both 13 and 34, 13 and 34, and the time frame is, you need to be in daily time frame. This one is for daily time frame. Don't use this for weekly, use this for daily time frame. That is what this one we will kind of use. So now let us kind of understand the execution rules. What are the execution rules? Pretty simple. What are the execution rules? For entry, long, buy above the high of the crossing candle high if the price crosses 34 line, see SMA. That if price has to cross 34, then at that place you will buy. For long, short, you will short if the price goes below 34 line. That is the short. Long and short we understood. Now exit just opposite of that. You will exit long if the price goes below 34 SMA, and you will exit short if the price goes above 34 SMA, right? It is, entry is more or less similar to the previous setup where we were using 20. Here we are using 34. We are using 34. Now why, you may be wondering why 34? It's all part of the Fibonacci understanding. I'm not going to discuss that here. It's a deeper concept. So from the Fibonacci series, we have pulled out these numbers, and these numbers works extremely good, right? Now that is the entry and exit. I'm going to show that in a bit. Now let us kind of also understand the re-entry. Slight variation to the re-entry here. You will add to a long position above the high of the crossing candle. Add to means if you start with one lot, if this situation happens, you can increase the lot. You can add 2 lots to that. Or after, if it happens again, 3rd lot, 4th lot. So this is a incremental trading strategy. It is perpetual, plus it will help you load on to the more capital and money and kind of trade. So we also call that as pyramiding. I'm not going to discuss pyramiding here. It's only an advanced concept, but you are getting some essence of pyramiding right here. Right, so you will add to the long above the high of the crossing candle if the price crosses 13 moving average. If the price comes below and crosses 13 moving average, provided this is very important, 13 moving average is greater than SMA 34. SMA 34 line is above the SMA 34 line. SMA 34 has to be here. SMA 13 has to be above the SMA 34. If that happens and then the price goes above 13, then you will add to the quantity. I'll show you on that. And the reverse of that is short. Add to short below the low of the breaking candle if the price crosses 13 SMA, provided 13 SMA is below, lesser than SMA 34. So these are the execution rule. So make a note of it, pause the video if you want to, write it down, make all the notes of it, and then jump on to the technical chart. So now let's kind of jump onto the technical chart. So We kind of set this up. Now let us understand the execution rule, right? So we have once again here 13 is red color is 13, 34 is green. We understood this. Red is 13, green is 34. So what is that we have to do? Every time price goes above the green candle, we have to buy. It comes below the green candle, we have to sell. So now here what has happened? See here, the price has come below the green, so we sell. And after having come down, look what happened here. Once again price went above the red and came back below. So this is a re-entry for adding more quantity. Here you have short the market. Here you can add extra lots. See here it kind of happened, it came back below. And then after that one long trade, completely wrong trade, and you will exit at 34 moving here. And as you exit, you once again go long. You went long here. And what happened here? The market came below the red line. But did not cross the green line. Once again went up. So what will you do? So at this place, right here, you can add to the quantity. We did one adding to the quantity in a short trade here. In a long trade, you can kind of once again add here. You can add to quantity here. If you want, you can add to quantity here. You can add to quantity here. But here, the market it exited, but did not go short. Once again, long trade from here. Then you can add to quantity here. If you want to add to quantity here, then market came below here and you exited your long trade. Went short here. Then once again this kind of turned out to be a break-even trade. Went long once again, then once again short here. Then finally it went long again. Look at this. After it went long, you got one big trade. This did not go long. Finally it exited here. After that beautifully once again it entered long and it took us all the way. And here you could add to the quantity, and finally exit happened here. So that is the power of this system, where we are using two separate simple moving average, like the horse, holding the reins. We start with one, and when the power comes in, we kind of put the horsepower to that and go for much more. When the speed increases, we can load on to the quantity and kind of ride with that. So that is the power of this system. So that is how the execution happens. Now let us kind of look at the risk management rules. Now what are the risk management rules? Initial stop loss, entry minus 3% for stocks, 2% for indices, 2.5% for commodities. That's the initial stop loss. Then once the trade is in the money by 3% or 2% to 2% for stocks, indices and commodities respectively, move the stop loss to break-even point. You already know those two things. That's what you will kind of do. So two simple risk management rules, and you already understood the execution rules. So risk management, you already know how to kind of put that in. Very simple, very straightforward, extremely powerful. This also works beautifully, right? So if the first system works for you, you can kind of pick that up. If the second system you feel more resonance, you can pick this up. Then we have two more systems which we will learn and see what kind of resonates. Stick to one of those at least. So if you've kind of enjoyed the double horse, type in the comment, ready to ride the horses. Type in the comment, ready to ride the horses. I'll see you in the next video where we'll talk about the third system. See you in the next video. Bye-bye.